Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's webinar, we're going to be talking about disbursements, and we're going to try and demystify disbursements in a legal office or a law firm. Today's webinar has been accredited for 1 hour of CPD credits, of professionalism credits. So we encourage friends joining us from Ontario, British Columbia, as well as Newfoundland to log into their individual Law Society portals and be able to search for the topic Disbursements Demystified, and it should give you the 1 hour of professionalism CPD credits. Okay? I kindly once again request you to use your to mute your phone lines and use our chat window to ask any questions that you may have. Now, if you are connected using your computer, we've often heard that dialing in using a phone number that we've provided is better for your audio quality. So if you're finding a bit of difficulties with your audio, we kindly request you to use your phone line to dial in. And it's going to be a bit of a presentation. We're going to talk about the different types of disbursements. We're going to look at the types of or the various ways in which you can actually disperse expenses for a client. And time permitting, we're going to look at a demonstration of how you would go about representing these disbursements and the types of ledgers and journals that you're expected to produce during your Law Society audits or your spot audits and the obligations that you have. Okay? Like every other uLaw webinar, today's webinar has an agenda. We're going to talk about disbursements, how do you manage them, and knowing that you can actually manage or disperse both using your trust account and general account, we'll kind of hash out as to why you can or probably shouldn't or wouldn't use the trust account to disperse all of your client expenses. We'll look at the key benefits of using trust accounts, again, based on your firm's requirements, your firm's areas of practice, and your style of executing your files. You can then make an informed decision whether it makes sense to do disbursements out of your trust account or not. And we'll then talk about general disbursements and how you would manage expenses coming out of your general account, whether it's your general bank, whether it's your business credit card, or owner's pocket. Okay? Well, then we'll talk about the different types of disbursements, both between the general and trust account, and the types of disbursements that are more natural to both these types of transactions. And last but not the least, we'll look at the expectations from the Law Society when it comes to the ledgers and journals that you need to produce that reflect these transactions or these expenses on behalf of the client or a file that are then called disbursements, and how they're represented through these documents. Okay? So let's start with a layman definition of a disbursement. A layman's term is really expenses that are incurred for your client by your law office or your legal office. So in general, if a legal office, you should expect two different types of expenses. One are the expenses that you incur as a business owner as an office expense to run your business or your office. Okay, that's really your office expense. So paying the Law Society's fees, buying stationery for your firm, for your printer. Those are the types of expenses that you would incur as a business owner, and those are your office expenses. Okay, so you can't charge that to your client. Whereas there are expenses that you sometimes have to pay on behalf of your client for a specific file. Okay, so a great example would be a court fee or an application fee. These are good examples. And if you're using in a real estate example, the fees that you incur using the conveyancer as a product, for example. So there are certain types of expenses that you may incur as an office, as a legal office, on behalf of your client for a specific file. Again, this is on behalf of a client for a particular file, because if you do have multiple files for the client, you still want to be able to demarcate them as disbursements for a specific matter or a file. Okay, so those are what we call as disbursements. And from an accounting perspective, it's really the bottom line need to record these transactions in the books or in a bookkeeping software to balance the accounts between what you spend, invoice, and recover. And the last term here, the ability to recover the expense, is one of the key differentiators between an office expense and a disbursement, where disbursement is an expense incurred on behalf of your client for a file that is a recoverable expense. So once you incur the expense, depending on whether you used trust funds to pay for that expense or whether you used the general funds to pay for that expense, how you recover that differs, but the bottom line is you have an opportunity to recover that expense that you paid for from your client. And from a law society's audit perspective, they require you to track, record, and manage and maintain proper books, documentation that reflect these transactions, the ins and outs out of these transactions. Okay? So key takeaway from this slide, disbursement is truly the expenses incurred by your law office for your client for a file or a matter, which is a recoverable expense. Okay, the fact that it is a recoverable expense lends itself to be a key component that needs to be managed well within the law firm. Okay, and why is because if you don't manage it, then you're not going to be able to, if you're not going to track it, it's going to be hard to manage. But if you're tracking it, but if you don't have a way to manage these expenses, a way to periodically invoice these expenses as part of an invoice, make them part of that invoice bill. If you're not managing them the right way, then there are chances that you may actually miss out to invoice or recover these expenses through that invoice in a particular billing cycle. Okay, so you always want to stay on top of your money, want to stay on top of your matters, and do everything possible as a legal firm to recover expenses based on the situation. So if it's a disbursement, you have to give it the fullest attention so that you can quickly make it as part of that invoice and recover that expense from your client. Because otherwise it becomes an office expense that was never required or needed in the first place. Okay? Now, what does it take to manage these disbursements, and what are some of the key steps that you may want to consider if you're just starting off with your law firm, or if you're a seasoned campaigner? Then this is a bit of a refresher for yourself. The first thing that we believe key to any transaction in a legal firm is the ability to record these transactions as and when they happen. Okay, so as a legal firm, we preach that you need to be disciplined enough or find the right tools and the mechanisms, or the process, if you will, the process to capture, track, and manage any transaction that happens within the firm. In this particular example, we look at disbursement. So very important to capture that particular transaction's information in time. So if you just went to the court and you paid for that court fee using your business credit card, maybe after you make the drive back to your office or back home, if possible, make it a discipline to do it the same day, to go into whether it's a software that you use or whether it's an Excel sheet or if it's just a manual way of recording these things, make a note, record that transaction as and when it happens. Okay, so record when the disbursement was paid, and obviously each transaction has its own set of core elements that you would want to capture, right? The essence of that transaction, as we call it. So in the case of the disbursement, obviously you want to look at key components of that transaction, such as the date. So when did that disbursement occur? You obviously want to look at the amount. So how much was that disbursement for? Because you have to recover exactly that amount. Was there a HST or a tax component? HST in Ontario, other taxes in the corresponding provinces. So you want to track the appropriate taxes, if any. Certain disbursements, certain types of fees that you pay may actually be tax exempt, in which cases you clearly want to track that as well. Capture the fact that there was no taxes that you paid for that particular disbursement. Court fee, application fee is a great example, right? But if you're actually going to be charging a disbursement, let's say such as a mileage, then it's left to you whether you want to charge that or not. So certainly you want to capture the amount, including the taxes. And then you want to capture how you paid for it, so that it's easy for you to balance your books internally. So if you paid it through your credit card, paid it through, first and foremost, decide whether you paid through your trust account, whether you paid it out of your general account, and then comes all these different elements of that transaction. So how did you pay for it? And what was the reason for that particular expense? So was this a court fee? Was this an application fee? Was this mileage? Whatever was the specific reason. And the last but not the least, the particular file and the client for which this particular disbursement was recorded. So the second point really lends itself to recording the client's name and the specific matter or file that this disbursement was related to. And we stress upon the fact that you do need to be granular enough that the disbursement is tracked or related to a file or a matter for a client. Going back to my common example, if you have a client and you have multiple files for that client, it's still very important that you relate a disbursement to a specific file. Okay? Now, we spoke earlier about the opportunity as a legal firm that you do have, that if you are in the business of accepting retainers, okay? So if you're actually managing a trust account and a general account, and if you're in the business of accepting a retainer, it's an opportunity for you to explore. If you haven't been already doing it, you're just starting off, it's an opportunity for you to explore, to know the disbursements. If over a period of time, I'm sure you figure out that for a specific type of practice, for a specific type of work, this is the anticipated disbursement amount that you would typically reflect. Or you can always tell the client, you know what, I'm going to take in another $250 for the disbursements. Obviously, you give back the money if you haven't used that up completely, right? So if you're actually using a retainer trust transaction, you do have the opportunity to pay for that expense right out of the trust account, because that's really not the money that you wanted to make a profit on, right? So if there's a court fee of $75, you don't want the added steps, that process of work to be done within your firm, which is to generate an invoice, track all these expenses, ensure you have them. You can actually pay that expense right off your trust account, okay? And then manage expenses or disbursements right off that. But let's say you're a firm that's not dealing with that. You actually want to pay for it yourself using your general account, include it in your billing cycle as an invoice, and then wait for the customer to then pay you after that. Then here's some information that you then further need to capture. If paid from a general account, then the firm then looks to decide what portion to invoice and when to send the invoice to the client. So we spoke about that. So if you are going to pay that disbursement from a general account, very important whether you include that disbursement as part of a monthly billing cycle, or for an example, if you're working with corporate clients, then we've seen clients who do disbursements, whether that happen on the first of the month or the last day of the month, they include it in that month's billing cycle. They don't do it right away. For some other areas of practice, it's a great habit if you can generate an invoice as and when these disbursements happen. So based on your firm's style, type of work, type of client you're dealing with, if you are going to pay these disbursements using your general account, please keep in mind that for your own benefit, you determine the billing cycle in which you want to include that disbursement transaction that's a recoverable expense or money to be paid by the client. Okay? Record the invoice and expense recovery. So that's the bottom line, because you're actually going to pay for it up front and then wait for your client to pay for it. So it's a bit of a leap of faith that you're taking, that your client would actually pay and hence you would be able to recover. God forbid, if for some reason you pay for that expense up front and your client's not paying for it back, then obviously you go back and forth to negotiate what best you can recover from the client. And if you can't completely recover that, then it's a mistake or a lesson learned. You may have to write it off as a business expense, right? Or provide a discount in that invoice and reverse it. Or through that lesson learned, if you want to move forward using a trust account to pay for those expenses and ask for it upfront from your client, then that's something you can do as well. Okay. So we've kind of broken down everything that I've said in the last 5 minutes into this particular slide. So when you're actually spending the money, which is really incurring that expense, which in this case is a disbursement, which is an expense on behalf of a client, which is recoverable, then the question really is, why not pay it right from your trust account by keeping it simple? Or, and here are some of the salient features of paying for it through a trust account. Some examples, if you will. So a court fee or other kinds of fees that are easier if paid from the trust account, because you really can't mark up or mark down on a court fee, right? It's $65 or $70. Whatever is set by the jurisdiction is what it is. Okay, you can't ask for more or less. When paid from the trust account, again, you don't have to take the extra step of generating an invoice, including it in that invoice cycle, generating it, and then recovering or wait for it to be paid, because you got that money up front as a retainer from the client, and that's the retainer amount or funds that you're using to pay for these expenses. A great example is, again, a court fee or an application fee where we see law firms writing a trust check. So let's say there's $100, the client just paid you, $500 worth of a retainer, $400 would be used for your fees, legal fees, and $100 was that court fee. You would actually pay for that court fee right off that trust account of $100. Okay, and then the trust balance for that particular client in that matter would be $400. Okay, so the bottom line is, if it is not your money after all, so just show it as an expense from trust, and this would technically reduce the amount of bookkeeping that's required. Now that's one style of doing things. Because you're a legal professional, you have this opportunity to do it. Some other professionals don't necessarily have the opportunity to accept money in advance, right? But let's say you are a firm, and we've seen this with many clients. Some clients, could be many reasons. For one, they don't have a trust account, or even if they did have a trust account, some law firms or legal firms may decide to actually pay for it using their general account. If you're a solo practitioner, a very common reason would be collecting points on a credit card, right? So you may actually pay for it yourself, pay through a business credit card. That's going to increase the amount of points that you get, air miles, Aeroplan, whatever it may be, and then you reimburse that from your client through that invoice. So there's a bit of that risk factor, but then there's that risk reward that you have to contemplate and determine. But if you're paying from the general, again, we're reiterating the important steps that need to be taken. Record the expense information with the date, with the appropriate taxes, the method of payment, because you have to now recover this through an invoice. You obviously need to go and do those extra bookkeeping steps, right? Record the method of payment, the specific matter and the client, and whether it was paid from your general bank account through a check, was it a credit card that you'd used, or was it your own money? It could also be the case where your employee
someone in your firm paid for it, and then the firm would then have to owe that money back to that employee. Okay? Okay, so let's consider the example of a general account. Okay, so let's say you actually paid for it upfront. You're not using trust, you're using a general account to pay for these expenses on behalf of your client, disbursements, otherwise. A very common question that we're asked and we come across in the industry is, when do we recover these disbursements? Okay, is there a template for these things? Is there a best practice for when I should recover or include it as part of my invoice cycle? A good answer to that, again, there's a couple of ways of answering that, but a good answer to that is comes down to the retainer engagement or the engagement that you have with your client based on how you write up your retainer letter. So these are the things that as a legal firm or a law firm that you really need to talk it through, have an understanding, and for different styles of practice, whether that's based on experiential learning or whether it's through learning from colleagues and others in the industry, you have to determine that with the client. For a really good example is if you're actually working with a client that came through a referral. Okay? There's a bit of a leap of faith that you may take because you know this person or you know a person who knows this person. So the confidence level of this person paying you may be slightly higher. That's an example. That's why it's very important that you also capture the source of contact when you're doing a client intake, because that can also give you the story of where your leads are coming from. So going back to that example, when do I make it as part of my, when do I recover it? Very important, that goes back to your retainer letter. So in that letter, if you're going to state that you're going to incur expenses and you're going to disperse the client as and when it happens, so you can actually add that in the retainer letter. I, the legal professional, will be making it a point to include any expenses that may occur, which are otherwise called as disbursements, on behalf of this particular client, my dear friend, on this file. I would be charging you as part of my immediate upcoming billing cycle so that I can recover it. Or in the case of corporate law, an example we've seen is you may strike a deal with the business owner or that particular business, which says, whatever is my legal fee, along with any expenses that I may incur in doing this work for your firm or your company, I would make all of that part of one invoice a month or 2 invoices a month. So the company may say, all right, Mr. Law Firm, please, or Mrs. Law Firm, Ms. Law Firm, give me 1 invoice. That's it. That's got to include all your legal fees and all your disbursements that you've incurred for that particular month. In which case, you obviously have to track, manage, and ensure that each and every disbursement that have been incurred in that month are made as part of that billing cycle. Okay? So we've heard stories where sometimes if you don't manage these in time, you don't report these expenses in a particular billing cycle, then the client has the opportunity to decline that expense if you actually reflect it in the next billing cycle. Because if you've got a good client, good relationship, maybe they would honor that, but sometimes it kind of leads to an opportunity for the client to say, no, hey, we agreed that you'd put all that in one bill every month, so suddenly you're going to send me a bill in the month of August for an expense that you incurred in May because you didn't track it. Not happening, right? And in which case, unfortunately, because you didn't manage it in time and reflect it in time, you actually lose out, recovering that expense. So when do I recover that disbursement? Based on your style of working, based on your retainer letter, based on the engagement letter to your client. But a general thumb of rule, do it if possible as and when it happens. If for a particular client you have to negotiate a termed billing cycle, then ensure that during that term or within that term, all of the disbursements are very much tracked and reported and made as part of that invoice. Okay? Now, before you generate that invoice, certain software tools provide you the opportunity to do a pre-bill or a preview of that invoice, which you can send to your client to say that this is what you should expect, or even within the firm for you to circulate it within the individuals. If this is a firm that has multiple lawyers, you may use the preview to get a approval on the bills before they get sent out. But before you do that, before you generate that actual invoice through that pre-bill process or otherwise, very important that you record certain pieces of information. Ensure that piece of information is available in that invoice. First and foremost, the client's information, which is the client name and the file. You certainly want to record the information related to the expense itself, which is, as we discussed, the date, the amount, including the taxes. We spoke about the reason for it and the method of payment, so that it's easier for you to track it internally for bookkeeping purposes. Now I'm going to add a final note, which is my third point here, which is also keep in mind if you want to take the opportunity to either mark up or mark down with the appropriate taxes on a particular expense. And this would apply to only transactions through the general account. Because these, if these are actuals, you can pay them both from trust or general. But if they're not actuals, you can only pay them from general. Okay? And the reason I say markup or markdown, a good example of a markdown is you never anticipated the need for a stand-in or standby, so you suddenly now have to make it to a court in Barrie, and you can't make it because you had another obligation, so you're going to request another friend, a legal friend, to represent you in court. This was never part of that original retainer agreement, and then you now have to pay that other person for, the work that they're going to do or represent you. You may then decide to mark down that disbursement. So maybe that legal firm charged you $100, but then you'd only charge your client $50. Okay? A markup example is, let's say you did the due diligence to negotiate a certain license with, again, this all comes down to type of practice, the area of practice, and file type, right? So if you're doing a certain area of practice and you're using a certain software that you then negotiated with the vendor to purchase multiple licenses at a discounted per seat cost, you can then charge the client a markup on that license and then pay lesser because of the discount that you negotiated. When it comes to an expense that you're using paid out of general for certain types of expenses, decide whether it's a markup or a markdown situation, and more importantly, the important taxes associated. Once you've captured all this information, generate that preview, ensure that it's all good. If you're a sole practitioner, it's just yourself, review it, and then generate the invoice along with the legal fees, or maybe in that particular billing cycle, you only have disbursements. Doesn't matter. But to make sure you send that invoice right away, and then based on the payment terms that you have with the client, you should expect the payment to be made so that you can then recover that expense. Okay? Now, if you're paying it through your trust, there's a couple of ways you can do that. You can do a trust transfer or a client payment. So a client payment is where there was no retainer involved. You did a leap of faith file. You started a file for a client. You did legal fees. You had about $200 of expenses. You generate the invoice, and then you follow up. The client is a good Samaritan. He pays you in time, and he's going to pay you the legal fees plus the $200 disbursement. You directly accept it as a client payment and deposit into your general account. In the case of a trust, if you're not using the trust to pay off disbursements directly, but you still have a retainer, you can generate that invoice, free up the appropriate amount for you to then do a trust transfer from the trust account into your general account. Okay. Now, if you actually paid for a specific expense, and this is why it's important that you track the method of payment, how you paid for it, all of that, then it becomes very important for you to track it so that you can pay yourself or pay someone else in the company if you owe them that money. Okay? And then obviously you either pay that third party or you pay yourself. Last but not the least, ensure that the ledgers and journals, those are the two major building blocks of documents required from a disbursement standpoint from the Law Society, ensure that those documents are reflected or documented. Okay? Okay, so here's another slide share of the types of disbursements and whether they're a good candidate for being paid directly from trust, or both, or only general. Okay? If it's a billable disbursement, you can actually pay both from trust and general. It's a unit rate, faxes, printing, things like that, only general accounts. If it's mileage, again, a general account only, travel time. So any recovery of expenses, bottom line, on actuals, such as court fee, application fee, by all means, you can pay it out of your trust account and or your general account. If you're recovering an expense with a profit margin, we spoke about that example, then only a general account. If you're doing outsourced consultancy on actuals, so even in the case of that stand-in, if you're actually paying the outsourced consultant $50 and it's exactly the same $50 that you're going to charge your client, then yes, by all means, you can actually use both trust and general. But again, if you're going to do it with a profit or a loss margin, then only general account. Okay? We're going to take some time to review some of these journals and ledgers once we get into a little bit of the demonstration. But importantly enough, ledgers need to be managed, both for trust and general, as you know. Because during audits, these disbursement ledgers for both trust and general are reviewed. Each and every transaction that has been disbursed directly needs to be recorded in your disbursement ledger. And again, based on your style, it would be managed either within trust and or general ledgers. Keep in mind that the ledger would always have a running balance by date. And obviously, the Law Society provides you with some examples. If you can look at the bookkeeping guidelines, you can Google it. It has these great examples of how you manage them. Now, if you do use a legal accounting software, such as uLaw, then the product itself should provide you with these documents. But if you're actually using a manual process or any other means or other products, you should either talk to the vendor themselves or within your practice build a process to deliver documents that are similar in nature and record these numbers and transactions that are required. Because at the end of the day, you want to save time in these types of documentation. You want to take the time saved to put it back into your law firm so that you can spend that, whether that's marketing your firm, whether that's just doing more files at the same time. And apart from ledgers, you do have the disbursement journals. We spoke about those two being the two big building blocks. So within the journals too, you do have trust and general journals. Okay. An important differentiation, if you will, between the ledger and journal is that the journal does record the method of payment, the purpose, etc., some additional pieces of information that was not available in the ledger. Ledger is strictly the amount, the ins and outs, whereas the journal has some additional information to give you more feedback on that transaction, which is the method of payment, what was it paid for. You can really look at an example here, the amount and the method that was used. It was a bank draft. That's how it got paid. I think we're looking at the end of the slide share. The last, I would say, Law Society document that would capture your disbursements is the fee book. Okay, so fee book not only captures all the legal fees that you've generated for that particular month or time period, but it also captures all of the disbursements because it is made as part of that invoice, right? So that's a revenue made. It so happens that disbursement as a revenue is a recoverable so that it balances the expense that you've already incurred. But nevertheless, from a fee book standpoint, it's definitely a component of that fee book, and you certainly capture the disbursements billed with the HST as well. The fee book, as you know, captures the invoice number, the particular client, and the associated taxes. So very important, and this is one of the important reasons why you want to capture disbursements as soon as they happen or within the time cycle that you agreed upon. Because if you are in a business that would have to pay HST, then keep in mind whatever HST you've collected and HST paid is what you would have to balance to either pay that HST back to the government or wait for a HST refund from the government, right? So keep in mind that there are multiple important documentation as well as touch points that reflect the disbursements, and it's one of the main reasons why you would have to capture these disbursements as and when they happen and make them part of that invoice. As you can see, the date is tracked, the invoice number, the particular client, the legal fees billed, the disbursements, HST, and the total. Okay, so with another 15 minutes left for us to continue down this webinar, a critical component, as I mentioned earlier, is to take everything that we've reviewed through these slide shares. We've primarily looked at disbursements, which is a data tracking component of your legal firm. We've looked at how disbursement, which is nothing but a recoverable expense paid on behalf of your client by your law firm, needs to be tracked on time with all of the pieces of information we spoke about. For those who did join us a bit late, I will go through that slide share real quick before jumping into a demonstration. And I'm just going to use the uLaw software as an example, and this should apply in various different ways across different products or other manual ways that you capture data. Okay? Now, we obviously have to leave you with the fact that when it comes to saving time, obviously, as today's legal practitioner, you're looking for tools and software and methodologies that can save you time as and when possible so that you can put that time into other better things. The legal accounting software is something that you may want to explore, just a candid product that was purpose-built to manage accounting touch points and practice management components of a legal firm or a sole practitioner or a law firm, right? Regardless of the process software that you use to track these, it's very critical that you build that discipline within the firm, or if it's just yourself as a sole practitioner, to record events as and when they happen. Because that's going to then lead to the next point, which is allowing you to record financial transactions and keep them as close as possible to the reality of what happens in your bank account. Because that's what's going to reflect in the reconciliation report that you're obligated to generate on a monthly basis. The reconciliation is keeping your bookkeeping software or your books as close as possible to your bank records, and if there are differences, documenting why those differences are. Okay. A legal accounting software, the advantage is that for the money that you pay for it, it obviously allows you to deliver these documents faster because they're inbuilt, it was purpose-built. You don't have to actually generate these documents. They're all built in for you to generate. Okay? So keep in mind, by doing this in a disciplined manner, you can talk about the compliance component that you as a legal practitioner have to comply, the accountability that you have both from your client's perspective as well as the accountability that you have for your own business's perspective. And if you can actually have an ease of use or a easier user experience in doing this, in capturing this data on time and delivering the documents on time, then that saved time you can then use it as a legal practitioner for other more profitable means, whether that's marketing your firm or otherwise, right? So that's the bottom line. There's a question I'll take this real quick about adding categories to a particular expense menu option. I want to say the quick answer is yes. You are able to generate expense categories beyond what you get started with, if that's the question. So for those who just joined us a little bit later, I'm just going to do a quick scan through of what we've looked at. Okay. So today's webinar, once again, has been approved for 1 hour of CPD credits, for professionalism CPD credits in Ontario, British Columbia, and Newfoundland. So for those who are joining me today across these 3 provinces, please to log into your Law Society portals and search for Disbursements Demystified, and then apply that towards that 1 hour CPD credits. We, again, looked at disbursement as a definition, as expenses incurred by your firm on behalf of your client, very important, which is a recoverable expense. And we talked about the opportunity that you have to manage these disbursements and how you pay them, whether using your trust funds or whether you're using your general funds to pay for these. The different style of how you would recover it. One is where you would actually pay for it up front in the case of a general account, and then generate an invoice and then get paid. In terms of the trust, you can actually use the trust funds to directly pay for a disbursement, in which case you don't have to generate the invoice. The funds were actually taken out directly as it is. Regardless of the type of method you would use, we looked at key components of that transaction that still needs to be recorded, such as the client, the file name, the date when it happened, the amount including the taxes, the method of payment, and who paid for it, and if you can actually granularize it to how you paid for it and who you paid it to, it makes it easier for you to balance your books. Okay? We looked at the appropriate time, that the best time, if you will, to recover these disbursements. And we discussed how it's closely related to your retainer letter or your engagement letter. And in some cases, it's as and when it happens. In most cases, I believe it's as and when it happens. In certain cases where it's agreed upon with a company or a certain firm that you work for, you may then generate timely invoices, in which case disbursements that have happened prior to that billing cycle are all part of that invoice. Last, we looked at candidates, the types of disbursements, and whether they can be dispersed from trust and or general. Okay, so a very high level, if they're actuals, you want to consider both trust and general as methods of payment. And if they're not, if you're doing it with a profit or loss margin, by all means only use the general account. And last but not the least, the 3 areas that from a law society standpoint that captures and records and documents these disbursements as transactions are the ledgers, both trust and general. We looked at journals, both trust and general, with the journal having the added information with the payment, the method of payment, and the purpose. And last but not the least, the fee book, where we capture the disbursements that was billed in that particular invoice number for a client on a particular date. And obviously, knowing that this is how you do it in a law firm, then you can make an informed decision of how you want to implement the data capture and the recording and the delivery of these documents, whether you do it in a manual way or whether you explore, and again, we leave it to you to explore these different types of products, but any legal accounting product is well suited to serve you and save you time. That gives you obviously the time that you need to spend on other better things. And as promised, I'm going to shift gears now to spend the next 10 minutes to use uLaw as an example where we'll create a client, create a matter, and we'll look at the different types of examples and how you can disperse clients and go through that whole motion. Okay. Okay. There are certain questions, obviously, that are slightly outside the realm of today's webinar topic, and I would encourage you to either email us at support@uLawPractice.com so that we can take it offline and explain this to you. But a quick question is around the reversal of an invoice. A reversal of an invoice is a process in a legal accounting world where, let's say you generated an invoice, right? It included a disbursement. And then the client, for some reason, said, hey, we never spoke about that. It was never part of that initial documentation. And then he rejects that invoice or he negotiates otherwise, in which case you have the opportunity to reverse that invoice in totality and then regenerate a new invoice with either removing the transactions in the previous invoice or reducing the amount. So once you reverse the invoice, you have to re-enter all the new legal bills that's got to be in that new upcoming invoice, including any reduced amounts. So that's really the process of reversing a particular invoice, is if you get into a bit of a huddle with your client, and hope that kind of answers the question from one of our audience members today. So I'm using a fictitious lawyer account called Roger Moore, who's the fictitious lawyer or legal representative here. And I'm just going to go ahead and create a new client. And we'll create a matter for that client. And we'll try to reflect the different types of disbursements and how you would actually go about documenting them, tracking them, and the documentation that the Law Society would then require. Okay, so let's say we'll say Timothy Lake. This is where you can capture how Timothy got to know you as a legal professional. Maybe this was a family referral. You could say referred Uncle Bob. So if you know that this person hasn't paid you well for some reason, then you can catch Uncle Bob, right? So we'll put an address. I do apologize for the touchscreen keyboard. That's been a bit of a problem with my particular device today. I'm just going to go ahead. I've just put a basic piece of information, just really your client intake form. You can actually add phone number, email, and also use, for example, in this case, uLaw's app to dial this individual. So I'll go ahead and save this particular client. And let's create a new matter for Mr. Timothy. Obviously, it's a great habit if you can do your conflict screening right before you actually create a matter. But that will be something that we'll deal with in another webinar. So I'll focus today's webinar to primarily deal with the disbursements in a particular matter. So let me just go ahead and say this is a small claims matter. Timothy, Fred. Now let's take the example where there was no trust money involved, right? In my first example, Timothy versus Fred is a small claims matter. I'll go ahead and do the work up front. There's no retainers, there's no money in trust account. I'm actually just doing the work, and I'm going to track, record, and document each of these transactions. So first, let me just put a very high-level fees. I'll just focus on disbursements more and the types. So let me go ahead and say initial, or I'll say small claims matter. I'll toggle this to even be a flat rate, and I'll say it's $400. And maybe in totality, I spent about 3 hours on this particular matter. Client intake, initial client meeting, court visits. Now, just for the purposes of today's demonstration, I'm just kind of categorizing all of the legal fee work into one particular docket. But if it really depends on your style, you could actually have individual dockets as and when they happened. And you can backdate them as well. But maybe this occurred later or earlier in the month, in which case you could just say, this was yesterday. So I'll go ahead and save this. So right now there's just a legal fee. Okay. So maybe let's take the example of a court fee, and we'll take an example of any a unit rate disbursement. And because there's only general money dealt with in this particular matter, we're going to use the general tab, and we're basically going to say, obviously I'm taking money out of it. So when I'm incurring an expense, I'm paying out of my general account. So money is leaving, which is a withdrawal from your general account. And hence, I'm going to say, I'm going to pay a disbursement from general. And let's do the actuals first. So let's say this is an actual. I'm going to say, yes, today I had a court fee. So this is where you're capturing the date. So the essence of this particular disbursement transaction is that the date of that transaction, the reason for that disbursement, you can add more description if you like, the pre-tax amount, so you could say $100. Was there a tax involved? If, let's say, this court fee was tax exempt, then there was no tax involved. Okay? Then we'll talk about how did he pay for it, who did he pay to. You could say Ministry Finance, and then how did you pay for it? So maybe you used your general account and you wrote a check, or it could have been a certified check. Obviously, there's then a number of that particular certified check that you would have to reflect. Okay? So this obviously comes directly out of your general account. And this could also be in a case where you paid out of your own money or others in the business. But I'm going to take the first example of it coming out of my CIBC general account. Okay, so now you have $452 worth of legal fees plus a $100 court fee, which was a disbursement for this particular client, leading to a total of $552 as combined fees that you now have to generate as an invoice. Okay, Now let's take another example. And I will then say fax. In this case, it's a unit rate, so it's not really an amount. It's basically you're going to charge for, let's say, 50 fax copies at $1 a fax. And in this case, I'm going to include the tax. Okay? And this is where I could actually either expense it to my office, but if I used my fax machine in my office, then I don't have to expense it because it's part of the fax machine, it's part of the business expenses that I had. But let's take an example. Let's take a out-of-the-box example. If, let's say, the fax machine in my office didn't work that day, and now I had to go drive to the nearby Staples, right? Really not the fault of the client, but then you had to end up paying $70. Instead of the $50 that you would have otherwise charged, you had to end up paying $70. So this is, and hence it's a marked down disbursement. So you've actually paid for more for it than what you're going to disperse. So the top part is where you're dispersing the client. The bottom part is where you're incurring the actual expense, right? And let's say you paid this to Staples. And in this case, I'm going to say I used my my TD Gold credit card. So let's say TD gave me the transaction. So now this is my second type of disbursement. The first was a court fee. The second is the fax. So this is a different style where it's actually a unit rate of 50 fax copies at $1 a piece plus the appropriate tax. There you go. $452 of fees and about $156.50 of disbursements. You can generate a pre-bill. This is just ensuring that everything is covered well. It's all part of that invoice within that particular cycle. So here are the disbursements, the court fee for $100, no taxes, and the fax at $51 a unit, 50 plus tax, $56.50, leading to $156.50. So you really like it. It's perfect. Let's go ahead and generate an actual invoice instead of a preview. So we'll do the complete invoice, which is going to pick up all the legal fees, all the disbursements that have occurred till this date. You can also do what we call a backdate. So if you only want to capture certain legal fees for certain disbursements, we spoke about this, if you have a specific billing cycle, you can actually use the document and backdate this to a certain date and only pick up transactions that have occurred before that date. Okay? So let me go ahead and generate a complete invoice. So this is the example where you're using your general funds to pay for it. Okay? I've also included a markdown, and we're going to look at the different, how it reflects in the different journals, ledgers, and fee book. Okay, so I've generated the invoice. Now once I have generated the invoice, obviously you have to keep a tab in expecting that payment. Now there are ways of expediting that payment process, right? So you can basically include a link such as this in your invoice if you like, that allows the client to actually click on it. So if you email this particular invoice and send them a digital copy, he or she may be able to pay for it directly at their own leisure. Or if you want to do it the old school way, you can always give them a call and accept that payment. You can even take a credit card on the phone if you like. So we'll say he's paid the whole amount, 608.50. And I've deposited into, well, let's just make it a check. Just keep it simple. Goes into my general account, and I can give them a receipt, and I'm pretty much done with this matter. So you were able to capture transactions, including legal fees, and more importantly in this webinar's perspective, the disbursements that occurred, the two pieces of disbursements, the court fee and the fax. One was on actuals, one was on a markdown. And you generated the invoice by including those disbursements within that billing cycle. And then you've sent it to the client, and the client's now paid you. Now, if you were to look at the important documentation that goes along with it, in uLaw you have this compliance panel that pretty much brings out each and every compliant. So if you look at the general ledger, because there was no trust involved, you can do that for the entire month, or you can generate it even for a specific client. I can say Timothy Blake,